Are your clients claiming their creative industry tax reliefs? Sandra Lee creates awareness on the creative industry tax relief, the process for claiming the relief and how Creative Tax Reliefs Ltd can help. By Sandra Lee, Director, Creative Tax Reliefs Ltd. In 2018-19 HMRC paid out over £1 billion in tax credits to companies within the film, theatre, TV, video games, animation, orchestra and museums and galleries sectors. Unfortunately, some companies, as well as their accountants, remain unaware that these reliefs are available to them. This is particularly true of charitable companies who assume, incorrectly, that the exemption from corporation tax available to charitable companies somehow prevents them from claiming the tax credit. Working together with accountants and their clients, we ensure that companies receive the benefit they are due, says Graham Suggett, Director of Creative Tax Reliefs Ltd. The Creative Industry Tax Reliefs. The Creative Industry Tax Reliefs are a group of 8 tax reliefs available to companies in the film, theatre, TV, video games, animation, orchestra and museums and galleries sectors. Film Tax Relief, FTR, was the first of the Creative Industry Tax Reliefs and was introduced in 2007. Following its success, it was followed by tax reliefs for companies in the TV, video games, theatre, children's TV and animation, orchestra and museums and galleries sectors. To qualify, a company must produce a qualifying film, TV program, animation, video game, theatrical production, orchestral concert or exhibition. How do the reliefs work? The reliefs work by treating each qualifying production as a deemed trade for tax purposes. The company receives an additional deduction based on the costs of creating the qualifying production, i.e. film, video game, theatrical production, TV program, animation, orchestral concert or museums or gallery exhibition. This additional deduction will first reduce the company's taxable profit, or surplus in the case of a charitable company. Where the additional deduction creates or extends a loss, the loss related to the additional deduction can be surrendered to HMRC for a payable tax credit. The tax credits are paid at a rate between 20% and 25% depending upon the specific relief, and the ability to surrender losses applies equally to charities as it does to commercial companies. Charities often have difficulty understanding how they can benefit from a corporation tax relief and receive a tax credit when they pay no corporation tax, explains Graham. The answer is that the reliefs. For more on this story, visit the news article link.